today. This as the demerger of Quess Corp has finally taken effect. Bluspring Enterprises is now listed as a separate entity. Remember, this is the company that holds their integrated facilities management business, their security business, the food business, and found it as well. Kamal Pal Hoda, who is the executive director and CEO of the company, now joins in to discuss the outlook for the business. Let's get the basic numbers out, Kamal. For the period that you have reported so far, the revenues have been close to around 2,500 crores with 4% EBITDA margins. Going forward, what is a steady state revenue growth that you anticipate in the business? And if you could give us a sense on margin expansion as well and break it down for all the verticals that you operate in right now.
Sure. Thank you, Mangalam and Nigel, and good morning to your viewers. We're just coming out of a fresh listing half an hour back. And to your question on revenue trajectory, yeah, those numbers are 9 months numbers. And from a future perspective, see the vision, we're creating this company out of a very rich legacy of strong operational excellence, a people mindset company, and, company which is poised to grow on the massive infrastructure investment and unprecedented infrastructure creation that's happening in the country right now. With that and with, let's say, 6 powerful brands that we have, we believe that the vision for 2030 for us would be to take the margins from the present 4% to almost 6%. We want to grow at least at 3x of the GDP growth rate. And the reason we are very bullish about this growth rate is we're not a fresh company. It's just that we've got into a fresh identity right now. But we've had years of deep domain operational knowledge, and we work with 6 powerful and trusted brands. And I can probably take a minute to explain each one of them. So Avon is a brand that runs integrated facility management across country. Food brand, in integrated facility management, we do around 360 million square feet spaces, and highly compliance-led services and tech-enabled services. We run a food business where we do almost 180,000 meals per day across the country. We have a security brand which has been there for 25 plus years with almost 21,000 security guards and digital security services.
Hi, got it. Got it. All right. Hi, Mr. Kamal. Good morning. Good to see you in. Congratulations on the listing. This is Nigel on this side. So should we assume that on a steady state basis, you'll be looking at growing between 20 to around 25%? Would that be a fair estimate? And also market share, I'm going by the rough numbers that you'll put out. I think 1,70,000 crore is the, is the total TAM for you all. And out of that, I think you'll have close to around 2%. So, where do you see this market share number move to on a blended basis?
So Nigel, yeah, you're right. Across the service lines that we do, we believe the total TAM is around 1,70,000 crores in the organized space, growing at a CAGR of 13%. And, we want to obviously grow faster than the market. And hence, in the near term, we want to grow 18 to 20%. That's the target that we have set for ourselves. And you're right, despite being, let's say, one amongst the leading in the national space, we are right now only 2% of the market share. So obviously, if we want to grow 18 to 20% when the market is growing at 13%, mathematically, we want to obviously enhance our market share from the present 2%.
All right, we take that point. To what would that target be? Do you have an aspiration here?
See, we want to, be, like I said, a 6% EBITDA margin company, grow 20%. And outbeat competition and market in that. Now, this should take us from the present 2% market share to at least 3% market share over the course of next few years.
All right, 3% over the next course of few years. But, on the margin front itself, overall margins go from 4% to 6%. On the one hand, one should look at it, one may look at it as just a 2 percentage point increase, but it's actually a 50% increase on the 4%. But what I wanted to understand is what is it that will drive these margins? Because IFM, anyway, a low margin business. What are the categories out of the 6 that you just enlisted, which will actually see the maximum operating leverage?
Yeah, sure. So see, you are right. Some of the business lines that we have are operating at, sub-market margins. And, I think one thing which will play out well for us is the mix of the businesses that we have. We've got businesses which are into food, telecom, and industrials, which definitely are, doing better margins than the present 4%. So food, we do around 8% margin. Telecom, actually, we do double-digit margin. and industrials right now is also in excess of 6% margin. So we are wanting to expand our high margin businesses, stabilize our FM and security businesses, which are obviously a bit below the market margins, and a lot of actions on digitally enabling some of our services, bringing down our cost to serve in some of these businesses. And I think demerger is that way has been very helpful to allow us so much of management bandwidth to focus on these businesses, and a lot of cross-sell opportunities. The breadth of services and the scale at which we operate.
So if you could simplify that for us, Kamal, if you could tell us what the revenue mix of the company would look like. Right now, nearly half of it comes from IFM. The others are almost evenly distributed. If you could give us a sense of how the revenue mix of the company would look like when you reach 2030.
Yeah, so you're right. Presently, 50% comes from FM, 20% comes from security, and the balance 30% is kind of distributed between the other three businesses. We are very bullish to grow food and industrial business in excess of 20 to 25%, while the others grow to, let's say, 15, 16%, which means that the blend of, 70% with FM and food and 30% else, we want to take this to 60% between FM and security and 40%. So 10% market or let's say 10% mix we want to improve from a high margin businesses.
Okay, all right. Very quickly, Kamal, before we let you go, your 2030 vision, going mathematically, should be that your revenues get to more than $1 billion. Would that be fair? With margins to the tune of close to 6% would mean that your EBITDA number will be in the vicinity of around 500 to around 550 crores. Would that be a 2030 aspiration? Yeah,
that's the aspiration, Nigel. We want to, grow 18 to 20%, and that takes us very near to $1 billion. And you're right, at 6% with the operating businesses, we want to be near to that 500 crores mark on an EBITDA basis by 2030. All right. And this Foundit, how much would that contribute in terms of revenues? It's still very small in your scheme of things, but how much should that move to? Yeah, so Foundit obviously is a platform investment that we've done, Nigel, and right now you are right. They have a smaller market share, and but it's a future enabled tech platform, and we are hoping that by Q3 of this year, Foundit should be a break-even business for us. And in platform-based businesses, the investments are done, so additional revenue then directly contributes to the margin. Foundit should grow from a break-even this year to a minimum 8 to 10% margin business next year. But it's also a strategic investment. And, as the valuation and the growth of business grows, we may want to be also an investor which, through which we unlock value in Foundit over a period of time.
That makes sense. We'll discuss that at a later date, when you're at liberty to speak a little more about Foundit as well from its current size. But just a final question from my end. You've always been acquisitive in nature. Once when you were part of Thomas Cook, thereafter Quess Corp, that got demerged, and now Quess Corp itself has been demerged. With you having this sort of management bandwidth, are any acquisitions on the anvil in the very near future, or you will let the business settle first and then maybe look at any acquisitions in FY 27-28?
So, the whole premise of demerger was that we wanted to carve out large operating businesses and let them focus on their organic businesses. Bluspring is going to be the next investment vehicle for us in future. So, we also want to, in next 5 years, position Bluspring as a next Quess. So, we would want to take strategic bets in Bluspring when it comes to the capital allocation policies.
All right, take that point. Thank you so much, Kamal, for joining in and giving us an outlook on that business. The stock mildly lower in today's trading session, but remember, this is the first day of trade. The stock is in T2T as well. So as business chugs along, let's see where this goes on. That's Bluspring, a demerged entity from the erstwhile Quess Corp. Take a short break, come back, get you more on the markets and stock-specific action. Stay with us.